Good evening. Good evening, good evening, good evening to those people that are joining at the moment. We are still waiting to see if Tian is going to join us tonight. Unfortunately, he had to travel up from Cape Town to Joburg, and then he had to drive through to Polokwane. So the poor man is rushing to get into his hotel room in order to join us. So I'm really hoping that he will be able to join us a bit later. In the meantime, welcome to everybody, and thank you very much for joining. Please start off and start sending in your questions, and let's see what we can talk about today. Say hi, say hi. So that's about it. So last week we had a number of people that asked a lot of questions about investments as per usual, which is fantastic. The one thing that I still get a lot of questions on is people asking, why should I pay a financial advisor to do any work for me? Well, you don't have to. As a matter of fact, I am busy putting onto our website basically a little column to tell you what you can do or how you can do your own personal financial advice. And then I'm also putting what a professional will be doing for you, which is basically exactly the same, except for the professional will know where to go and what to do, while you as the individual might need some guidance with regards to that. And this is why I think that people should not worry too much about paying. At the end of the day, the actual commission or fees that's being earned is not coming out of your pocket, so to speak, because you pay a premium. And then out of that premium, as part of the cost the company charges, the commission is being taken out of that. But why it's important to make use of a professional is at the end of the day, you can go and do everything yourself. You can go and do your retirement planning, you can go and do your estate planning, you can do everything yourself. Then once you've determined what you need, then you can go and get your own quotes for different products. And then when you've got your own quotes, you can actually go to the insurer and you can apply directly with them. The problem is, if you do not have somebody that guides you with regards to the planning, you might be planning for one type of event and completely forget about 10 other possible events. You can go and do quotes for yourself, and you might do a disability quote or think you're doing a disability quote, but actually only doing is a physical impairment quote. So that is where the professional comes in. They can help you guide so that you have the right advice and that you've got the right products and that you're actually covered for what you think you're going to be covered, that you choose the correct portfolios that's in the correct risk profile, and so forth and so forth. And at the end of the day, it's not really going to cost you anything more. And if you really don't want to pay for financial advice, then it's easy. Negotiate with the advisor up front and say to him, listen, yeah, I'm willing to pay you 500 Rand for the service you're going to deliver to me. And get the information and then go and do all the applications and everything yourself. It is like a mechanic. You have the choice. You can take your car to a mechanic to have it serviced and get it done properly, or you can do it in your own garage. I know personally that I would much rather pay a mechanic to fix my car and to do the necessary service rather than having to sit and spend 4 or 5 hours of a Saturday or Sunday trying to do something that I'm not proficient at. Any case, that's the short and the sweet with regards to that. I'm just checking here to see if we've got a couple of questions. So far, it doesn't look as if there's any questions. And I haven't heard from Tian yet, so I suppose he's either still traveling or he's rushing up to his hotel room. But please, folks, drop a couple of questions. I would like to sit here and tell you all about financial advice from start to finish, but I think I am going to bore you to death if I have to do that. So I'm hoping to get a specific subject that I can talk on for you. And the best way to do that is to actually know what people, to get a subject that people want to know about. So let's see, is there anybody that's willing to venture a question? James, Evangelisi, Suzanne, Lee, Patrick, Manja, Yo, it's amazing how quickly people join and then go away again. TikTok is one of the most amazing things in the world. It takes you to places that you've never been in your life, shows you things that you've never seen in your life. Yeah. Stupid join. Why would you call yourself stupid? No, man. Call yourself smart. Langpad van Gaar. Okay. Tabani. Good evening, Tabani. Zeta. Up to date joined. Okay, so if you are up to date, what is somebody that's not up to date? What do you call somebody like that? Stupid question, I know. I just love looking at the people they joined and what their names are or what their avatars is that they put forward. I always find it absolutely fascinating and interesting. Feroza, very nice name there, Feroza. Michelle Peter, good evening, Michelle Peter. So yes, JMF, welcome to you again. Thanks for joining, mate. What shall we talk about? Give me something. Give me a question. Give me a comment. Give me something. Tell me what you would like to know. Good evening, Rona. Welcome. Some comments in this live were filtered to protect the community's experience. I wonder what that means. What do you need protection against? I know one thing after last week. I will not sit here and have a cup of coffee again or take my vape out. Last week, TikTok warned me that I was displaying something in the form of either alcohol or tobacco or something which is against their standards. Up until now, I still don't know what I did. I was having a cup of coffee and that's the only thing I could think of. I had a couple of pulls on my vape, but I can't even think that it must be that. So yeah, folks, it's a wonderful medium to communicate with people and to give information through and hopefully help people. But it is a medium where you have to be very careful with what you say and what you do. Thank you for the question. I want to know about how you ended up in your career and how you decided it is for you. Oh, wonderful question. So, mate, to be honest with you, I actually worked full-time in a restaurant and I was making plenty of money there. And then I met my first wife there and her dad actually said, you cannot marry my daughter unless you have a proper job. So I went and I worked for an insurance company and I became what they call a broker consultant. And I did that for 5.5 years and I quite enjoyed that. And then it was just after our first election in 1998, I went to the insurer and I said to them, listen here, I want to get a promotion. I want to move up the ranks. And I said, sorry, we've got this new thing called BEE. And therefore, you're going to have to make peace that you're going to stay in the position for the next 20 years. And that didn't sit right with me. And therefore, I became a financial advisor because I wanted to become more and I wanted to grow, get more wealth. So I became a financial advisor and promise you it was so difficult the first 5 to 7 years that I really did not enjoy it. But today, I love it. It's something that came with time. I really love it today. Phoenix, are you Italian? No, I'm not Italian. What I am, however, is Greek or part Greek. Suppose you can't say Greek. My dad is from Greek descendancy. His father was Greek. His mother was an Afrikaans lady. And on my mother's side, both her mum and dad were full-blown Afrikaans-speaking people. So Burkies. So yes, I have got some Greek in me, but definitely not Italian. Good evening. I was working for a corporate company, then bought by the bank. My pension was not transferred. Well, mate, if your pension was not transferred, then you have to go back to them and ask them about your pension. And they must be able to tell you where it is, how much it is, and give you the options as to what you can do. Cannot be lost. The previous company that you were with must still have it. The HR should be able to help you because they should be able to tell you who the administrators are that were administrating your pension or provident fund. And once you know that, you can get into contact with those pension fund administrators and then you can carry on with regards to having the money transferred or withdrawn or whatever you want to do. But it's definitely not lost. Just find out. Raygon, we don't care. Okay, Raygon, I don't know what you care about or what you don't care about, but it's fine. I don't care either. All the best. Where can I log a query? I suppose you're still talking about your pension fund here. Well, like I say, go back to the company and go to the HR department. Speak to them. They should be able to put you into contact with the right people. Unless we know who the administrators of that pension fund is, I can't tell you where to log a query. Okay. Your thoughts on the BRICS common currency effects on RSA? I must be honest with you, I still don't have a thought about that, because to me the BRICS currency is not yet active, so to speak. So we don't know what's going to happen with that. I think if the BRICS countries get more members and they create a currency that will become big and strong, and it should, because the BRICS companies, the BRICS countries that have joined is already a formidable group, and if they get even more people to join or more countries to join, then the BRICS currency could become a very strong and efficient currency. And if that happens, it will have a positive impact on economies around the world, especially, I would say, the BRICS countries' economies. What it's going to have on South Africa, I think that all depends on what BRICS is going to deliver going forward. I think that it could potentially be a game changer going into the future, that America will or could, let me say could, lose their stronghold in terms of the world economy. But yes, it's not something that's going to happen overnight, that I can tell you. It's not something that's going to happen in the next day or two, a month or two, a year or two. I think it's going to take a long time, and I think that because the wheels of the economy and countries are so big, it spins so slowly, it gives us a chance to see what is coming down the pipeline. And as this thing continues, we will get more information, and we will be able to give more information to people. Why do you love what you currently do? Well, the reason why I love what I currently do is that I know I help people. Every time that I assist somebody to make the right investments, when I see that their capital is growing, that the income that I'm providing for them is enough, life cover is paid out, and that the beneficiaries are not destitute, that's why I love it. I know that I am assisting people. I can tell you a very quick story with regards to why I think so. Is a few years ago I had a client, very good friend at the end of the day, not only a client, and I sat with him one night late into the evening drinking lots of alcoholic beverages, and he took out a substantial life policy with disability and severe illness. And a few years later, he was diagnosed with lung cancer. So few million rand paid out to him, which helped him with the medical treatment that he needed very desperately. Unfortunately, a few months later, he was diagnosed, or not diagnosed, he was then declared disabled. And then he got another lump sum benefit, which now meant that he didn't have to worry financially about having enough money for medication, everything that goes with it. And unfortunately, he then passed away later on. And then his family was financially secure. And that, as much as I miss him, and as much as it pained me when he passed away, it gave me a sense of great value and thankfulness that I could have done for him and his family what I did. So yes, I love what I do. I think the other thing as well is that it keeps my brain very active, because you have to keep on top of things. And it is nice to talk to people that have never done financial planning for themselves. And then you start helping them, and you can just see those mountains of worry and doubt melt away when you can give them answers and solutions to what their needs are. So that's that. I hope I answered you. That was that one. Let's see. I'm 60 years now. Is it worth it to take out the 30K? Mate, you're talking about the two-pot again here, and again, like always, I'm going to say no. I don't think it is ever worth it to take out the 30K. The tax implications hurt you. The growth that you're losing hurts you. One day when you get to retirement, less income hurts you. So no, it is not a good idea to take the 30K. If I want to save around 500 a month, considering inflation for the next 20 years, what would... And then it disappears. Phoenix, you must finish the question here. So considering what would my advice be? I'm not going to give you advice, Phoenix. It's as easy as that. And the reason why I'm not going to give you advice, Phoenix, is because every person's situation differs. So every person has different needs, has different family setup, has different needs at retirement, has different income and expenses, assets and liabilities. I cannot in good faith tell you take 500 Rand a month and go put it in company A, B or C or product X, Y or Z. Unless I know what your situation is, it will be absolutely irresponsible of me to give advice and say do X, Y, and Z. So this is what I will advise you to do. Go and check out my profile for my WhatsApp number, and then you WhatsApp me, or you go onto my website, www.heptagonc.com, and you set up an appointment, or you send me a message there, and then we can make a decision as to how I can help you going forward, whether it's going to be via a video conference, in-person meeting, whether it's all going to be in writing, doesn't matter. But I need to get a lot of information from you before I can make any recommendation. Okay. I'm 52, working 33 years that far, leaning towards resigning instead of retiring. And what? Rona? I'm 52, working for 32 years thus far, leaning towards resigning instead of retiring. Whoa, Rona. No, you don't want to do that. You definitely don't want to do that. Rona, if you resign, okay, then it means that all that pension fund money that you've built up, all that provident fund money that you've built up is going to be taxed on resignation benefits or withdrawal benefits. The tax starts from Rand 1. You are going to pay tax through your nose. Then whatever is left, you have to go and invest in order to get an income. Where are you going to invest that money to get an income tax-free? You can't. You're going to have to put it back into an investment that's going to create tax again. So you are going to hurt yourself so badly. So that's the one thing I can't tell you. Don't even consider that, Rona. What you must do is when you get to retirement or to the point where you almost retire, is to actually go and sit down with somebody to do some proper financial planning with you, to decide what will be best in terms of how much you're going to withdraw in cash, how you're going to take your income, what type of product you're going to do. But definitely not resigning and withdrawing the money. Retire. Definitely always retire, especially if you've got so many years that you've been in that fund. Rona, yeah, I just said to the previous gentleman, contact me on my WhatsApp number or via the website that's in my profile. And even if I just speak to you for 20 minutes, I want to try and convince you not to go the resignation route, because I promise you, you are going to hurt yourself so badly. You don't want to do that. Oopsie, there it happens again. Hold on a second. Markley is asking, do you have to take your 1/3 when you retire, or can you leave it and only take a monthly income? No, you don't have to take the 1/3. You can actually add it onto the 2/3 and you can get a higher monthly income. But, and here's the but, once again, I would advise people to go and get proper financial advice, because I can promise you, when you go and do the calculations, if you take your 1/3, okay, and there's a portion that is going to be tax-free. The first 550,000 is always tax-free if you haven't taken anything. That 550,000 Rand that you can take out tax-free, you can go and invest in a different place and get another income with minimum tax implications. The money that then remains is going to give you a smaller income than what you would have gotten if you left the 1/3 in there. But because it's a smaller income, it means a smaller tax implication. So you always want to calculate your 1/3, 2/3 options in terms of tax. Not only in terms of income, but in terms of what income option am I going to take, how much is it going to benefit me to have the tax-free portion, and how much is it going to then cost me in terms of tax that I get from either my living annuity or my life annuity. So yes, you will get a higher income if you leave it in there, but I will not necessarily do it because there is a good possibility that taking a portion of the capital tax-free, you will be able to get tax-free, and then you will get an income that there is less tax on. Okay, let's go on to the next person. Johan at Moot Properties. One of my neighbors passed away 2 days ago, only about 56 years old. Eish, man, Johan, that is terrible. Is there any specific question I could answer with regards to this, over and above saying, sorry to hear about your neighbor? It's never lekker when that happens. Ronan McKinnon, don't resign. Thank you, Juan, for telling Rona as well that she mustn't resign. Appreciate it. Almiro shared your live feed. Thank you, Almiro. Missy, just clicked your live. What sort of advice are you giving regarding finance? Mine is regarding debt. Missy, I'm a financial advisor, so I give advice in regards to estate planning, retirement planning, and investment planning. That is what I specialize in, although it encompasses everything such as the illness, disability cover, tax-free plans, etc., etc. So that's what I do. Your advice, you say, is regarding debt. I very often speak to people about debt, and I try and get people to budget and become more financially disciplined. And when it comes to debt, I don't know if you are one of those people that have a debt, what do I call it? Debt restructuring, whatever. I try and keep people away from that because I do believe that people can manage themselves out of their debt. So yeah, let us know exactly what you do in regard to debt. Okay. Going to lose your UIF. Johan says going to lose your UIF. Johan, I don't think, when it comes to Rona's situation, I think losing a UIF is the smallest of her problems. If she resigns instead of retires. Okay, let's see what's next. Okay, Rona, I look forward to talking to you. Into 2FSA. Archie, will I be taxed if I take cash for deceased pension fund? You won't be taxed, Archie, but the deceased will be taxed. So the estate will be taxed, so to speak. So what you're basically talking about here is somebody had either a retirement annuity, a living annuity, or life annuity, and they pass away, and now you are inheriting that money from that deceased person. Okay, so because you are inheriting the money, that person would have paid tax, and SARS will therefore go and do a calculation on that capital amount, and before they pay it out to you, there will be tax that goes to them. So you will not be taxed in your personal capacity, but the deceased's estate will be taxed, and the money will come off that. So I hope that answers your question, Archie. Johan, always have life insurance in place, people. Thank you, Johan. You seem to be my biggest supporter tonight. I appreciate it big time. Linda Lee, what type of investment would you recommend to invest 550 tax-free at retirement to minimize tax? Okay, so Linda Lee, it all depends on what you're going to need the 550K to do for you when you get to retirement. So when you take that 550K, if you don't need an income from it, okay, and you say, I can take this money, I can go and put it somewhere, and I don't have to worry about an income until a long time from now. Then I would go and invest it into what they call a life investment, what we used to call an endowment. Because then that money, all the growth that happens in there, any taxes that's payable is paid by the portfolio manager in the fund. So you as the individual that has this 550k investment, you are not being taxed and you don't feel the effect of that tax. After 5 years, this investment, we call it tax-free, becomes tax-free. It actually means it's after-tax money because it's already been taxed in the fund. And therefore, when you then start taking an income, any income that you get from there is after-tax money and is therefore in effect tax-free. So that's if you're just going to do an investment. But if you take the 550k and you actually need an income from it, then there's a thing that they call a 5-year or 10-year or 15-year guaranteed income plan from discretionary funds. Long word, short answer is when you invest your money there and you start taking an income, you are taxed but this little bit. So like 10%, 5 to 10% of the income you taxed on. Because what the product does is it gives you an income from your own money. And there is going to be a little bit of growth on that 550k. But that bit of growth is where that small percentage of, or that small amount of tax comes in. So those are the two options that I would mainly say is possible if you want to keep the money tax-free. There are a variety of other options that one can follow, but in order to once again give proper advice, one will have to consult with you before one can do that. Okay, so let's move on and see. Rona, working for the government. Rona, you say Johannes working for the government. Ah, fantastic. Let's see what's next year. Sorry, folks. Missy, sorry, I meant my question was regarding debt I have. Oh, but I understand what you do now. Yes, Missy, so if you have debt, I will gladly consult with you. I will talk to you about setting up a budget, working on a budget, what it means to be financially disciplined. And in terms of your debt, I will actually show you a plan on how to get out of your debt. Not everything I'm going to say to you might like, but I promise you, if you follow what I tell you, you will get out of debt. Okay. What are the best performing balance funds in the marketplace? Only RC. What are the best performing balance funds in the marketplace? Oh, only RC. Man, this is like asking how long is a piece of string. And the reason why I say this is a question of how long is a piece of string is every month all the companies bring out their fun fact sheets. So they say last month, and I'm thumb sucking here, completely thumb sucking. So at the end of August, the fun fact sheets that they got tell you what the performance was on that fund for 1 month, 3 months, 6 months, 1 year, 5 years, 10 years. And obviously, depending on the time period, all of them are going to differ. So now the question is, okay, so if you want to know which balance fund is the best performing one, over what period of time are you talking about? Are you talking about 1 month, 3 months, 5 years, 10 years, whatever the case might be? So I can't tell you because I don't know the time period. Here's the other thing. If, let's say, Alan Gray was the best at the end of August over a 5-year period of time, okay, in September, it could be Investec. And in October, it could be Old Mutual. And in November, it could be Momentum. It could change literally on a month-to-month basis because the time period is measured from 5 years ago until now. And where the one fund might have had a good month somewhere in the beginning or a bad month somewhere at the end, the opposite might be true for a different fund. So there is no right answer when it comes to your question about which is the best performing balance fund. What you should be asking is, which balance fund do I want to invest in if I'm going to choose a balance fund? That is what one has to choose to look at, because you want to choose a fund that is in line, the way that it is managed by the portfolio manager, the performance that you see, and then the companies, the underlying companies that it invests in, the shares that it invests in, if that is aligned to what your risk profile is. So here we talk about, you go and determine what your personal risk profile is, number one. And then number two, once you've determined what your personal risk profile is, then you go and determine the strategy in terms of your investment. And once you've done that, then only do you choose a fund of your choice. Because if your fund choice and your strategy is aligned with your risk, you're going to get the results that you want. And that's what we have to aim for, is to get the results that we want. And it does happen, okay, that one is doing great in a fund for 6 months or a year or 3 years or 4 years, and then you decide, listen, my risk profile has changed, I need to be a bit more aggressive, or I want to be a bit less aggressive, and then you can change the funds. So I know this is not answering what you want to hear, but quite frankly, there are a number of great balance funds out there. You just need to figure out which one is going to be the best for you. The performance at the end of the day doesn't mean that much, because we have to determine the timeline we're talking about. We can't do that. Okay. Turning 61, have an annuity and received a monthly payment. Turning 61, have an annuity and received monthly payment, 240,000 left. Can I withdraw all of it? No, you can't. You can only withdraw it when it's less than 174,000 Rand. I stand to be corrected, but if memory serves me right, that's the amount. So you're still going to have to receive more monthly income until that 240,000 has gone down below that figure of 174, and only then can you withdraw. Okay, next one, yeah. I'm 59 years old, working for government. Can I take all my money at retirement? Adelaide, you can. Motlatsi, Adelaide, you can. But don't do it. I cannot stress this enough, folks. To withdraw all your money, I don't care if you're working for government, or if you're working for a company, or if it's your personal pension fund, or whatever the case might be. If you are at this age and you withdraw all your funds, you are gonna cry because of the tax, because of the income that you're not gonna generate. And I promise you, I've seen this so many times. People that draw all their money lose all their money. It is 1, 2, maybe in 100 people that takes that money and does something with it that is actually profitable. The majority of people, with all due respect, lose the money. Because if you did not have financial discipline during your lifetime, if you did not run a business and learn how to work with money, if you don't know how to do those things, you're not going to do it suddenly when you are at retirement age. You're not going to do it. So don't take the money. Just don't do it. Anyhow, let's move on. Well, the two are completely different. Could you briefly explain arbitrage versus traditional investing? So arbitrage, if you're going to look at the definition of arbitrage, arbitrage says it is buying something at the guaranteed rate and selling something at the guaranteed rate. So if I'm buying something at the guaranteed rate of 10 Rand per unit, and I'm going to sell it at the guaranteed rate of 12 Rand per unit, then I've made a guaranteed return of 2 Rand. Okay, so that's what arbitrage says in definition, and these days arbitrage is very often used, especially when it comes to the crypto exercise. Traditional investments is where a portfolio manager goes to the stock exchange and he goes and buys a variety of company shares, and he buys and sells as he believes the companies are getting better and weaker and where he's going to make profit and not profit. So that in essence is the difference. But then there's other differences. Traditional investment could be taxed in a person's hands if it's a LISP investment, and there could be a capital gains tax implication. Or there could be no tax implication because it's done in the form of a life investment and it's taxed within the fund. Arbitrage is at this stage seen as an income. So it goes on top of your income. Whatever growth you get there goes on top of your income, which means that you go into a higher tax bracket. Okay, so that is two very basic differences between the investments that you're talking about. But they are literally worlds apart when it comes to the investment world. I hope that helps with a basic explanation. Sanlam savings policy, is it good saving 10% of my disposable income? Shunko, it is always good to save 10% of your disposable income. It doesn't matter whether it's a Sanlam or any other company. How you're going to save it and where you're going to save it is important. Any type of savings is good. Let's just get that going. 10% of anything that you're saving is good. Okay, so that's the first thing. The second thing is you can make sure that that 10% saving works to the best of your advantage. And the way that it's going to work to the best of your advantage is if you pick the right investment from a tax perspective and then from a portfolio perspective, you can make sure that you get the best possible growth because you pay less tax if you've got the right investment, and you get more growth if you've got the right portfolio. So that is where my expertise will come in for somebody, is to go and say, okay, let's look at the amount of money that you're going to save. Let's see where we're going to save it in order to get those two factors to work to your best advantage. But the important thing is saving 10% of your disposable income is fantastic. Do it. Okay, let's see. Follow the live data, Johan. Tell the people about different types of insurance, life, disability, and severe sickness. Okay, Johan, I will do so. Thank you very much. So life cover is straightforward life cover. It pays out in the event of your death, and it goes to where your beneficiaries are. So if you want to leave a legacy for your family, your wife, your kids, whatever the case might be, then that's where the life cover comes in. Disability cover is where something happens to you, an accident, a sickness, something that happens to you that impacts your life so badly that you cannot work anymore. Then you are disabled. So if you're working in any type of institution, you're in a car accident and now you are in a wheelchair because you broke your back, now you are disabled, you can't do the job that you've been doing. Then your disability payment can pay out, and it can either be in the form of a lump sum where you can then go and invest it to get your own income, or it could be in the form of a disability income where the insurer pays you a monthly income up until the age that you've chosen. So that's where the disability comes in. Severe sickness pays out mainly for the following four things: heart attacks, strokes, cancer, coronary artery diseases. That's where the majority of severe illnesses happens. Those four is the majority of severe illnesses. About 85% of all severe illness claims that are paid out are out of those four events. But these days, the insurers has a list this long because they now include things like Alzheimer's, Parkinson's, diabetes sometimes, being bedridden, arthritis comes into play. There is so many different types of severe illnesses. And severe illness pays out irrespective of life cover and disability cover. So severe illness is literally an amount of cover that one takes and say, listen, if something happens to me, this capital amount is either going to have to help me with my medical expenses, or it's going to give me an income for a period of time, be that 1 year, 2 years, 3 years, whatever the case might be, until I either recover and I can go and work again, or I become disabled and my disability has to kick in, or I pass away and my death cover pays out. So those are the three differences. The one pays for death, the one pays for disability, not being able to work. The third one pays out for one of these scary sicknesses that we all can get at any time, and that you want to have some protection against your financial well-being at the moment. Thanks for the question, Johan. I hope that is what you wanted to hear. Let's see who's next year. There we go. Hendrik de Beer, thank you for all the time and advice. I'm always learning something new with your videos. Hendrik, dit is net 'n plesier om water. Baie dankie vir die comment. Ek waardeer dit. What's next? Archie, is it a good idea to take all the deceased pension and buy a house or reinvest? Archie, like I've explained so many times, I can't give you an answer because I don't know what your personal circumstances are. If I knew what your circumstances are, I could most probably advise you as to which way you have to go. For some people, it will be best to buy a house and they know I never have to pay rent again and this is going to take some financial burden off me. For other people, it will be better to reinvest it and to let it build until retirement so that they have retirement capital. For other people, it will be better to invest the money and actually have a monthly income from it. So it really depends very much on your personal situation and that of your family. In order to actually get guidance, you're going to have to speak to somebody. Financial advisor is always a good idea. Somebody that's just financially very savvy. If you know somebody that you know they're good with their finances, I'm sure they will give you some guidance. So what I would advise you to do, Archie, is either you contact a financial advisor such as myself, or you contact 2, 3, or 4 of them, get different opinions, go and speak to somebody that you trust, somebody that's financially well off. Just speak to a few different people. Get different takes, different ideas, and then make an informed decision as to which is going to be better for you. Okay. Is it wise to transfer my pension fund to other investment companies or to leave it in the GPF? Leave it in the GPF. Motlatesi, leave it in the GPF. At this stage, I don't even doubt that the GPF is the best place. Based on the defined benefit that they give you, based on the medical aid that you retain, based on the funeral benefits you retain, the pension fund with the GPF is absolutely the best, and that's where I will leave it. There are 1 or 2 instances that I have come across where I could say to people, listen, yeah, take the money. It's not necessary to leave it. But it is literally 1 or 2 instances. I honestly can't tell you even how many times I have given that advice. It is so few. And I've been doing this for the last 30 years. So leave it in the GPF. Is there a life cover in SA that I can borrow the value of my cover? So Doug, no. You cannot borrow the value of your life cover. What you can do is if you've got R1 million life cover, you can go to a bank and you can go and borrow R1 million from a bank. And then you can give that R1 million life cover policy that you have to the bank as security, that in the event of your death, that they will get that R1 million to pay off the debt. So that's what you can do. I don't think that any form of debt is good. No personal loans is good. Bonds, semi, car finance, semi. But yeah, preferably one should not have any debt and you shouldn't go into loans. But if you need to, then that's where the life cover will come into play, is to give the security to the bank that they want. Okay. They have this in the US. Oh, Jan, interesting fact. I didn't know that. Arafat, he can see to the bank. Yes, indeed, sir. Like I just said. Nice to see you, Arafat. I will definitely contact you. I know we spoke a day or 2 ago, and I haven't sent you a message again. It's been a bit busy, but I'm going to get back to you, Arafat. Just hang in there, mate. Ladies and gents, can anybody give me the time by any chance? I just realized that I didn't bring any watch or cell phone or anything with me. And for some other reason, I cannot find the time on my screen. So if anybody could give me the time, I'd really appreciate it. Talking about seeding to the bank, 9 out of 10 times, if you 9 out of 10 times, if you go and buy a house and you bond it. Oh, thank you, Wendy. Now I know I've got about 15 minutes left. If you go and buy a house from the bank, okay, and you obviously do it with a bond, 9 out of 10 times the bank will in any case insist on life cover. And sometimes they will just ask for life cover. Other times they will ask for life cover and disability cover. I see sometimes these days they ask for retrenchment cover. I cannot believe that they're asking for that. Severe illness. So they could actually make up a package and say, we need X, Y, and Z from you. Okay. Very important. The bank will contact you and say, congratulations, your bond has been approved. We want the policy. Speak to this gentleman or this lady. Let us do your life cover for you. Most people are immediately in a flat spin and they want to take it out because the bank has said they should. Not necessarily. If you already have a life policy in place, you can cede your existing life policy to the bank. You can also go and see if you can't get a better rate than what the bank's offering. If the bank says to you it's life, disability, severe illness cover, and they do a quote for you and then they say it's 1,000 Rand a month and you're like, whoa man, I'm going to have to pay 5,000 Rand a month for my bond and now I have to pay 1,000 Rand per month for my insurance. This is just getting too much. Well, then go and get a second or a third or a fourth opinion and quote. You are never obliged to do something through a specific organization or institution. And I know that when it comes to bonds, banks, bond originators, they just love to give people this story about you need X, Y, and Z, talk to this person, they must do it for you. It's not necessary. Find somebody that can help you with the best product for you at the best rate for you. Okay. So, yeah, that's my little soapbox rant for the evening. Any guys, thank you, keep it up. Thank you for sharing. Thank you, Johan. Johan, I think you must send me a personal message. You have been so kind tonight. I would really like to talk to you, even if it's just to say thank you very much in person. Moot Properties, funny enough, I'm sitting here tonight in Fairy Glen at my son's house where I'm talking to you all. And they used to stay very close to the Moot, and they have a friend that is doing very well when it comes to properties in the Moot. So, yeah, not too long ago, I was there. Oh, sorry to see your network problem there. I wish I could do something about that for you. 1845, there we go. On SS behind that one. Let's just see. And what about the 10 years guarantee term on my life cover? So the 10-year guarantee on your life cover, okay, all that means is that when you take up your life cover, the insurer says this premium that you're willing to pay, we are willing to guarantee you this premium. Whether there's an escalation built in or not, doesn't matter. We are willing to guarantee you that this premium will not change for the next 10 years. If after 10 years, there has been some wild thing that's happened, like COVID in 2020 when we saw all the people passing away, there were so many claims that the insurers had to pay that at that stage they realized, oh shit, we have to pay out all these millions of rands. The premium that we've been asking was not enough because of the crisis we have at this stage. We cannot offer life cover at this premium anymore. So they had to go and increase their premiums. They had to go and actuarially calculate what is the actual premium that people should be paying. So your 10-year guarantee term means that for 10 years, they guarantee that there's going to be no impact on your premium. But in year 11, if something has happened over the period of time that has now caused life cover to substantially be more expensive. Only then will they contact you and say, listen here, your premium has been 500 Rand a month for argument's sake. We can't give it to you at 500 Rand a month anymore. We can give you the same life cover at 550 or 600 Rand, just as a stupid example. And then they give you the option. Yes, I'm going to pay the higher life cover and I'm going to get a new guarantee for another 10 years. Or no, keep my premium at 500 Rand and reduce the life cover. So your life cover will only be impacted based on your own personal decision. These guaranteed terms can be anything from 5 years to 25 years. So you can actually ask your insurance broker for a longer guarantee. And yeah, it's maybe not something that one should be saying, but a lot of the guys does the shorter guaranteed terms in order to get a better quotation for their clients, because they sell on premium and not on the quality of the advice. And what I mean by that is a lot of insurance brokers will give you a quote for life cover and go and look for the cheapest possible quote, because they think because they're going to give you the cheapest, you'll take it. They don't realize that if they give proper advice, that the client that is taking it will be willing to pay the higher premium for the better advice. Once again, one of my little soapbox exercises. Let me get off that. I hope that answers it for you, Ntabo. Johan Moot, that's why I'm asking, because it seems like SA is behind on this one. I take it that we're talking about the loan thing there that we were talking about. Nana? Okay. Hi Pieter, nice om weer van jou te sien. Ek het nie van jou vergeet nie. En Pieter, ek gaan definitief na jou toe terugkom binne die volgende paar dae. Het al jou informasie, byt net vas, maat. Ek is by jou shortly, ek beloof. Okay, most people prefer a term cover than a whole life cover. Can you inform them of the difference? Yes, Arafat. So, on term cover, it means that you take out life cover, but you say, I only want it for the next 20 years. So if you are 30 years old, for example, you will have life cover until you're 50, and then the policy gets cancelled. So if you have not passed away in those 20 years, then your cover stops and you don't have any more life cover. Okay? So that's what term cover is. Term cover is very popular, especially when people do buy a house and take a bond, because they know that my bond is going to be 20 years or 25 years, so I just need cover for 20 or 25 years. Normal life cover is where there is no term attached to it, and the policy will pay out whenever you pass away. So whether you pass away when you're 50, 60, 90, 120, it doesn't matter. The life cover will always pay out when you pass away. So which is the best, term cover or life cover? Once again, it comes to your personal circumstances and what you are going to need. For family protection and where you want to leave a legacy to your family, you're most probably going to have a proper life policy that's going to pay any time into the future. When it is just a specific amount of money for a specific amount of time that you want to cover a debt or whatever, then term will be better. Speak to somebody, get proper advice. I've seen it very often that people do take out term cover because they want to pay the lower and the cheaper premium. And then they get to the end of their term and now they realize I need this life cover to carry on for the rest of my life. But there's now only 1 year left on this term cover. And now they sit with the problem because now they need the cover after that 20-year period in order to leave that legacy to provide for their family. But they can't convert it from 20 years to life because they've already got diabetes or they've got high cholesterol or blood pressure or something like that. And now they can't get life cover anymore. And now they've just shot themselves in the foot because when they took it originally, they took it for a term in order to pay a smaller premium. And now they're sitting with, I can't get life cover. I literally need to die within the next year before this policy gets to the end of the term. Otherwise, my family is not going to have anything. So very important, get the financial advice. Make sure that you speak to somebody that can tell you the differences, that can plan with you on your future. I know you might think it's because I'm a financial advisor I'm saying this, But a good financial advisor's advice is worth its weight in gold. Absolutely. Okay. So yeah, Arafat, so we've just addressed the term cover exercise. Peter, 100, dankie Peter. True Speaker, are you late? I don't know, True Speaker. Tell me what the time is quickly, please, man. I just had to ask a bunch of people to send me time because I forgot to bring a watch or anything with me, and I think we are close to 7. But I can take another question or two. Wandy, thank you, Wandy. You're an absolute champ. Thank you very much. So, True Speaker, I've got 5 more minutes if you need to ask a question. Tumelo, can you help with successful way of saving money monthly? Yes, Tumelo. In my profile, go to my WhatsApp, send me your details, meaning your contact number, and ask me the same question. I'll get back to you, and then we can set up an appointment and we can do an advice process with you, and then we can advise you as to how and where you should be investing money. So absolutely, that's what we do, is we give people advice on investments. Okay. Next time, please open boxes for questions. Nico, you're going to have to help me with this, man. I'm doing TikTok on the fly. I know it doesn't look like it because I post a lot of videos, but especially the live TikToks that I'm doing that on the fly. Tonight, again, I was looking at all the different buttons, trying to figure out what can be done. I have absolutely no clue. So I still need to either get somebody that can show me all these things, like the boxes for the questions, or I have to just get it on the way I'm doing, or figure it out as I go. But honestly, I don't know how to do it. And yeah, Nika, I'll try and find somebody that can help me. But if you don't mind, you can send me a message in the WhatsApp, and maybe you can explain it to me. I will be greatly appreciative. Okay, great stuff. I don't know what all these badges and things mean, but so be it. If I get divorced and we share pension, does that eat into the 550k tax-free at retirement? So basically what you're talking about here is you have a pension fund, for example. Your wife does not have a pension fund. Now you get divorced. Now the divorce decree says that half of your pension must go to your spouse. Correct? That's what you mean. So it does not eat into the 550k tax-free at retirement. There is certain legalities with regards to that. And I'm not going to try and explain that because I am not a specialist when it comes to all the divorce stuff. As a matter of fact, it's a bit of a minefield. But no, you will split it. She will get her part. You will get your part. You get to retirement. If you've got 1.65 million rand in your retirement fund, you can take 550,000 tax-free. Okay. Fayed, your son can help you with the technical stuff. I'm sure he can. He's just busier than what I am. As a matter of fact, when I walked in tonight, he walked out, as he is going to some other function or shooting something for that TV show, Maak My a Millionaire. So yeah, I'm sure he could. Although I don't even think he's actually done a live TikTok. So yes, I'm happy to help you. Oopsie. What? You see, this is what happens when I don't understand what happens. There's all these boxes that pop up and I don't know how to kill them. Just a second, folks. Just trying to figure out what this thing wants from me. Oh, there we go. Back. I'm happy to help you if you need. Please, Nico, like I said, I will genuinely appreciate it. So just send me a message in the WhatsApp number, my profile, and I'll gladly sit and chat to you. Man, I will even pay you to help me with technology. Lindley will WhatsApp now for financial advice. Fantastic, Lindley. I'll see how I can help you. I think you will be my financial advisor. Thank you very much for the vote of confidence, Mutlateti. By all means, contact me. Let's see what we can do for you. Bart, do you have to take the one pot on retirement? I have 1.9 bar in my RA and I am 60 now. Bart, funny enough, this is most probably the first question we answered earlier tonight. Because the one pot we're talking about is your savings pot. No, you don't have to take it. You can leave the entire amount in your pension and take a higher monthly income. So you don't have to take it. But, and here's the but, I do advise that one consider taking some of it, if not everything. Because if you're going to get the 550,000 Rand tax-free that SARS offers, and even if you just take that 550,000 Rand tax-free, you could go and invest that into a different investment where you're going to pay either no tax or very little tax to give you a bit of an income. It means, though, that your 1.9 million Rand is now only 1.35 million Rand. That means that you are getting substantially less in terms of income than what you would have gotten out of 1.9. Because you're getting a smaller income out of your 1.35, your tax is smaller. So you plan what you're going to take in terms of 1/3, 2/3, one pot, two pot. You plan that based on not only on the amount of income that it's going to generate, but also the tax implication that it's going to have. So don't have to take it, but definitely consider it, even if it's just the tax-free portion. The one important thing is, even though I say consider it, is that one has to be absolutely financially disciplined. That is the most important thing. Okay. So ladies and gents, thank you very much. And Nico, thank you very much for letting me know it's 7 p.m. I thought it might be so much. Thank you very much. I'm sorry that Tian couldn't join us. I think he's still traveling. I'm sure I'm going to get later from him a message apologizing profusely. But I'm sure he will be in contact soon and he will try and make it with us for another evening. Have a wonderful evening. It was nice talking to you all and giving you some feedback. And I look forward to next week, Tuesday, when we can do it again. Go and think about questions that you want to ask. Come and pop them in. All the best, folks. Keep well. Bye-bye.